The adoption rate of this obscure commodity will be the fastest of all commodities ever. Pop quiz. What do Norway, Nestlé, and NASCAR have in common? Or what about Leonardo DiCaprio, President Biden, and JetBlue? They're all among the companies, celebrities, cities, and countries that have made commitments to curb their contributions to climate change or eliminate them entirely. And they're all using the exact same tactic to do so. It's one you've probably never heard of. In fact, it's a commodity so new that it doesn't even have an official market yet. There are no quotes or tickers on Yahoo Finance or Financial Post or Google Finance. Pricing is almost impossible to find. But it's on the verge of erupting onto the world stage. In a few years, even your Uber driver will know everything about it. I'm talking about carbon credits. From here on out, the carbon credits news cycle will accelerate, and it's going to happen at a breakneck pace. The tidal wave of government and corporate money that will create this change will put NASA and every other government body to shame. It's going to create enormous, long-lasting change in how investing works. This is the type of opportunity that, like clockwork, comes along once in a generation. You are getting a front row seat to one of the most incredible emerging opportunities you will ever see. Once you're up to speed on how the largest entities in the world plan on fighting global warming, you'll be set up to profit from them in a big way. So let's get you up to speed on the basics. I guarantee you will be smarter than any of your friends and colleagues by the end of this missive. How are carbon credits created? Carbon credits are generated through emission reduction or direct emission removal. For example, carbon credits can be earned for the renewable power plant that is used to displace coal-fired electricity generation through a fuel switch. For each ton of CO2 which is displaced, a credit is earned. Carbon credits can also be generated through removal of greenhouse gases. This is known as carbon sequestration. Yeah, it's a hard word to say, but people will be impressed by it. Carbon removal comes from projects such as forest restoration and avoided deforestation. These are grouped as nature-based solutions. Or credits are created through physical removal of carbon from the atmosphere through technology known as carbon capture and store, or bioenergy combined with carbon capture store known as negative emission technologies. Carbon offset projects which sequester carbon, such as reforestation or avoided deforestation, are a function of opportunity cost. This means the alternative use for the land is what partially drives the value for the offset. Land which could be used for agriculture or livestock is therefore a function of crop and livestock prices. The Trove Intelligence Global Carbon Credit Supply model indicates that prices in the voluntary market will need to rise by an order of several magnitudes. I'll get into what that means. To continue to incentivize carbon project developers. Now, the chart you're looking at right now is the global carbon credit supply curve, excluding NDC adjustments. Average over a period from 2020 to 2050, and it's dollars per tons of carbon dioxide equivalent. Now, I'm going to ask you, have you booked a flight lately? Probably not. If you try to look at pricing for flights on Google or any other online portal, under the price of the flight, you will see the carbon emissions that your one seat is responsible for. This is done for two reasons. First, to start making customers aware of the amount of carbon emissions they are responsible for the flight. And second is to start conditioning customers such that when there is a cost now to negate those emissions, the customers know the real cost. And trust me, you will pay for this. Carbon credits are an emerging international marketplace. The beauty about the carbon market is that it is global. Greenhouse gases migrate and emissions from one nation end up in the skies of another. It requires global acceptance and adoption to solving the problem. In the voluntary carbon credit market, what's called VCM, a credit produced in one country can be applied against emissions of a company located in another part of the world. For example, the Bonobo Peace Forest in the DRC, the Democratic Republic of Congo, is one of the largest reforestation projects in the world. Credits earned from this project can be applied against emissions of a company domiciled in Europe or North America. This creates an incredible opportunity for an international marketplace for credits. What you're looking at right now is a table that we created that shows the total value of transactions by offset type in the voluntary market for the past 4 years. The total transaction volume last year is estimated to be over 3 times the volume it was just 3 years prior. And this is exactly what makes it such an exciting place to invest. All of this is building up a pressure chamber of demand in the VCM, the voluntary carbon market, that has not yet reached a tipping point. When it does, there's a lot of upside to be had because it's the perfect setup for a long squeeze in the voluntary carbon market. Rising emissions from growing population, tightening government mandates on carbon emissions, increasing consumer demand for environmental responsibilities, and more transparency in emission reporting, corporate buy-in at every level, even from non-emitting companies. Altogether, this is going to result in a desperate scramble for high-quality carbon offsets, of which there are a few. If you thought the rise in the price of lumber was crazy in 2021, just wait until you see the voluntary carbon market in 5 years. Voluntary carbon market pricing. The bad news is that since VCMs, the voluntary carbon market, is such an undeveloped market, pricing information is very hard to obtain. In fact, the term voluntary carbon market is somewhat inaccurate in itself. The market itself is purely ad hoc. This is such a new commodity that there is no real actively traded market. But you see, that's great news because it means very few people are actually investing in this market right now. This isn't even hitting a blip compared to gold or Bitcoin on Google Trends. That's the chart we just put together here using Google Data Analytics. That blue line is the actual carbon credits. The red is Bitcoin and gold is on top. As an investor, you know that the time to make your bets is when no one else is looking at the sector. To start shedding light on what carbon offsets could be worth, let's start by looking at the price floor. Carbon offsets produced through means such as reforestation have an opportunity cost, breakneck price acceleration. Based on this, the Trove Intelligence Global Carbon Credit Supply Model, boy, that's a long name, indicates that prices in the voluntary carbon market will need to rise to continue to incentivize carbon project developers. Furthermore, how credits are produced gives them different base values. The table I put together here for you shows the variation in global carbon credit pricing across different types of carbon offsets in the voluntary market from 2017 to 2019. There's the transportation, fuel switching, chemical, industrial, waste disposal, renewables, and the forestry. In 2021, that's this year, prices in the voluntary market have been red hot. Prices have regularly been quoted above $7.50 per ton and as high as $15 per ton for higher quality carbon credits. Catalysts and opportunities in the carbon markets. The key catalysts for the carbon market are government-led initiatives to promote the carbon marketplace. These include establishing a global carbon price floor, heavily enforcing the achievements of NDCs, and regulating investment in carbon removal technology. All of these are heavily bullish for carbon offset prices. It will happen. The government will get involved. Then you're going to have the second major catalyst, corporate-led net neutral and net zero pledges. Expect to see corporations race to become net zero so they can remain competitive in the marketplace. Remember, I've talked about and written a lot about the cost of capital. And if you go green, your cost of capital will be lower than those that do not. And then watch for additional demand from erasing historical emissions. And the third, demand-driven development of reporting and exchanges. As outlined, this will include scopes 1, 2, and 3 emissions. I've gone in that in great detail in past missives. In the near future, it will also require highly liquid, transparent exchanges for both the compliance and the voluntary market. This has always been the trajectory of any new commodity. Only this time, you know about it before it has achieved anything close to equilibrium. The carbon market is an incredible asymmetric bet. There's so little downside. Climate change isn't going anywhere. An incredible upside. Early adopters, project generators, and holders of carbon credits and offsets can earn substantial returns over the coming years. Very few people know about this brand new commodity sector yet, but everyone understands it immediately once exposed. And everyone who understands will invest because it makes sense and it's cheap to do so. Of course, You can stay on the sidelines if you want, but before you make the decision, recall one of Warren Buffett's most famous quotes. It goes like this: "Someone's sitting in the shade today because someone planted a tree a long time ago." Those trees are literally being planted today all across the world, and I'm here to help you make a profit from it. To find the companies best positioned to make money from the $100 trillion war, follow me. In my monthly newsletter, I'll be publishing the best carbon investments that come across my desk. If you want to be among the first and only to know, sign up today. Stay safe.